What is price action and how do you use it? When you hear price action, what does that mean? And for technical analysis, the main function of price action is exactly what is price doing? What kind of structure is it forming? Is it trending down? Is it trending up? Is it consolidating? What is it doing and how do you read it? So this is pound, Aussie dollar, British pound, Australian dollar. This is the weekly chart, and as you can see, I'm zoomed out pretty far. This is 2009. So here's 2008 to roughly 2014. So 6 years is what we're looking at right here in this picture. And I'm just gonna scroll around and look at what price does and kind of explain what I see and the most basic form of price action. You can break it down into different types, candlestick formations, different price patterns. All that to me is also part of price action. But this technique of actually reading what price is doing just bare is going to be the fundamental knowledge of what price is doing in whatever time frame you're in. And so just understanding the basic price action is going to help you with all the other technical analysis. So it's very simple. It's not hard. This is clearly trending down, and it is forming lower highs. Here's a high. Here's a low. Here's a lower high. Here's a lower low. A lower high, lower low, and it continues forming these lower highs and lower lows until right down here. And right here, this is forming some deceleration. We're no longer making lower lows or lower highs. It has stopped and is consolidating and decelerating. And as you can see, it never continues this downtrend after it decelerates. So this is the first sign that price momentum to the downside is slowing. Once it forms the first higher high, now the price has broken where the previous highs were getting to. Once price breaks that, forms a higher low, we've got a confirmed trend change that can now possibly be a trend in the bullish direction, and it will give you an edge to trades that are going to be long trades. So as you can see, after this higher low, it formed another higher high, higher low, and now it's continuing higher highs and higher lows to an uptrend. Now up here, we did not get near as good as deceleration as that last example, but I would not consider this a strong lower low, but it does start to make smaller lower high and lower lows. But once it makes this low and then this confirmed lower high, now it's a greater probability that price is going to be pushed to the bearish direction. Here it does that and it starts making lower highs and lower lows. Here again, it failed to make a lower high. This high is higher than this high, and so now another trend change. So that is the basic knowledge of price action. where are the trends? What are they doing? Higher highs, higher lows, where is it trending? And spotting areas where it's failing to make a very strong, convincing higher high or higher low in any direction, and then you wait for a clear higher high, higher low to confirm a trend change. Now, if we were in this consolidation phase and it would have made a stronger lower low, lower high, then it would be a continuation after this consolidation. So that is the basic use of price action and definition of price action. It is literally, what is the price doing? Where are the highs? Where are the lows? What kind of structure is it forming? So this is very clear, clean price action, whereas there's going to be some other pairs where the trends are not as clear, different time frames where typically when you go to the lower time frames, they're a little messy, they're not as clear as trend. But for the most part, this is how I read price action. Now, to take it a step further, when you talk about multiple time frame analysis, it is looking at price action on different time frames. So, for instance, on this uptrend right here, as we're making higher highs and higher lows, if you were to go to a lower time frame, say a 1 hour chart, this is a weekly chart, but if you go to the 1 hour chart, this is a run. A run is a straight shot within the trend. So pullback, run, pullback. The pullbacks are counter trend and the runs are with the trend. So pullback, run, run, pullback, run, pullback, run. Within these runs and pullbacks, the 1 hour chart will have its own trend with runs and pullbacks within a single run. So let's say from this run, from this low to this high, on a 1 hour chart, that would be a trend in its own, with its own runs and pullbacks. I have a video on multiple time frame analysis. You can go and check that out, but I wanted to do a video just on the higher highs, higher lows, lower highs, lower lows, reading where those extremes are reaching and using that to your advantage for a trade edge. Now, this is not the only decision you should be making in whether or not to get in a trade. You need to layer it with other technical analysis like you would see in my other videos, my trade examples, my trades on watch. You can go through those and see how I layer other forms of technical analysis, trend lines, horizontal lines, EMAs, Fibonacci, layering in other forms of technical analysis, but with this as the fundamental knowledge of what price should be doing at any one point in time. So to me, this is the most important technical analysis, is price action and what it is doing and being able to read it. And those other ones really help confirm the value areas that you're wanting to get in, given your bias on bullish or bearish momentum. So I hope this video helps. If y'all have any questions on this or need further clarification on something that I have said, just post a question in the comments and I will be happy to help.